Hi there, everybody. Donavon here from the Elevation Real Estate Group at Remax Treeland. Thanks again for joining us for another video. Tyler and Joel, our furious leaders of the Elevation Real Estate Group, have joined us once again. Thanks, guys.
Hi, Lee.
Hey, good to be here.
So we're going to give a little bit of a market update. Joel is then going to talk about some new changes that we've seen brought in by CMHC. And we're just going to finish off with kind of a picture of where we're at now and where it looks like we may be heading in the coming months. To start us off, I just want to give you some really high-level market statistics here from last month. So in May, we had 805 sales take place, which is a 17% increase from the month before. However, we're still at about 47% less sales than we would normally see in May, in what we saw in May of 2019. As far as new listing goes, we have less of those as well. We have 2,207, which is 38% less than we had last May. However, once again, we saw a big increase from last month, 56% more new listings, which really shows a bit of a growing confidence in the market from sellers. They're willing to put their houses on the market now. To wrap it up, our total inventory is sitting at 6,454 listings for the whole Fraser Valley, and that is a 24% decrease from what we would have seen last year in May of 2019. So we're overall at a lower inventory, but that inventory level has slowly been growing as we've continued to go into this new market that we're seeing. So Tyler, why don't you take it away and tell us a little bit of what this means for the average person if they're looking to buy or sell.
Yeah, I just want to touch on what's going on out there. What we've seen recently, most recently, is things are getting better on the virus front. The daily cases are continuing to decline. And as of today, for the last 5 days in a row, we've seen 0 deaths across the province. So that's leading to people becoming a little bit more comfortable to get out there and test the waters. And buyers are adjusting to new safety measures and just increasing comfort. Every day that things improve, they feel more comfortable to get out there. So for the current market, what we're seeing, prices have actually remained fairly stable. We're not seeing a lot of downward pressure on values because in many areas, there's a shortage of inventory still. Sellers have been reluctant to list if they don't know where they're moving to. And that's kind of a self-fulfilling loop. If people want to move, but there's nothing for them to buy, so they don't put their house on the market, thereby nothing for other people to buy until a few brave souls get out there and test the waters and put their house on the market. So that's what we're seeing today, fairly strong pressure, low inventory. The buyers are more eager to get out into the market, and they're actually being fueled right now by the low interest rate environment. We saw the lowest ever 5-year rate offered this week, which isn't necessarily the best mortgage for you, but it is indication of what's going on in the rate wars that's happening right now. Further fueled by some changes and new restrictions coming in by CMHC that are pushing a bunch of buyers off the fence to make a move, maybe sooner than they might have. So that's what we're seeing right now. Of course, looking to the future, we always want to monitor the supply versus demand. That tells us what's going to happen in the market and what's going on right now. Now, longer term, we are expecting supply to increase as people with lost jobs and reduced income can no longer bear the burden of their current mortgages and they decide to sell. There's also what's being called the mortgage deferral cliff that's coming up in the fall, because right now 15% of Canadian mortgages are in deferral, and that's a limited window of opportunity that people have that's going to run out. And when that runs out, some of those people may be forced to sell if their incomes haven't recovered. So we're expecting inventory to rise. We're also expecting a decrease in the demand with fewer buyers entering the marketplace if they've got reduced income prospects and they don't have jobs to go back to, at least for the foreseeable future. The official unemployment rate right now is 13%, which is one of the highest we've ever seen, if not the, at least in recent history. That is going to trickle into the real estate market for sure. So Joel, why don't you give us a comment here on what's coming on with the new CMHC rules and maybe how that could impact purchasing power for buyers?
Yeah, especially first-time buyers, they are usually requiring insurance, or the banks are asking for insurance on their mortgage in case they don't meet their obligations, the buyers. So what's changed there is CMHC at the end of this month is going to stiffen up the qualifications that people would normally need to meet to get an insured mortgage. So typically, for instance, in the past, at the current moment, you could spend up to 39% of your income on your mortgage, and they would say up to 42% of all your debt would be counted before they would approve you with a mortgage. So if you had car loans plus a mortgage, you could use 42% of that to put towards your car loans and mortgage. And if you went over that, you were declined. Well, they are going to be reducing that to 35%. And sorry, I said 42%. It's 44% was the original rules. It's going to go down to 42% total debt, and 35% of your mortgage debt can be applied. Your income can be applied towards your mortgage payments. So it's going to reduce a lot of people's ability to buy at a higher purchase price. They've also changed the credit score. So they used to say you were okay. They would approve you and insure you with a mortgage if you had fair credit rating. Now you have to be having a good credit rating. So your credit score previously was 600, was considered you were fine. That's a fair rating.
Mm-hmm.
Now you have to be up to 680 to get approval, which is a good rating. And the last thing they said is no more borrowed down payments. So sometimes we would borrow money against other, like take out a loan against a card that we've already paid off, or some other family-friendly loan. They're saying, no, you need to come up with that money out of your own assets, out of your own savings, and you can't go and borrow the down payment anymore. So that's CMHC. And that will have reduced, if you get a mortgage insured by CMHC, it'll reduce your purchase ability by 11%. So for example, if you were trying to buy a $600,000, if you were qualified to buy a $600,000 home or townhome, you would only now be able to buy a $534,000 home or townhome, depending what market you're in. So that's a significant adjustment, and it will definitely reduce the buyer pool, which will affect the overall market. The good news that's still out there, sort of a silver lining, is there's 3 companies that do mortgage insurance. So CMHC is just one of them, and there's 2 other private ones which have not adjusted their rules to match up with CMHC. So there still is some opportunities. We don't know how long the other 2 insurers are going to continue to offer the same easier qualifications, but at the moment it's still available. And at the end of this month, CMHC gets tough.
Yeah, that's right. That goes into effect July 1st, I believe. And yeah, great points there, Joel. That's awesome for everyone to know. That's only if you're purchasing a home with less than 20% down. So that is usually going to be a lot of first-time home buyers that haven't owned a previous home, that don't have that equity to move forward into a new home. And so anyone else that is looking to buy a home with less than 20% down is going to be affected by those rules if they're going with CMHC.
Yes.
So thank you very much for that update. I think generally speaking, a lot of what we've seen is the spring market basically pressed pause in mid-March, and that continued through the back half of March into April. And it looks like we've kind of hit play again in May as things have started to ramp up. We saw more sales, more new listings. We're still definitely lower compared to last year and other years previously, but we're starting to pick that speed up again. So it looks like we may be having our spring market in summer this year instead. I know that a lot of my clients are wanting to move, and they're needing to either move before September to get their kids into school. And the other thing that I've seen a lot of is subject to sale offers, and people listing their homes with the intention of writing subject to sale offers. I don't know if you guys have seen much of that, Joel and Tyler, but I've had a couple clients do that as well. And like you said, they don't want to put their house on the market without knowing where to go. So that's one option that they have to do that.
I've experienced that.
Mm-hmm. Yeah, so we're seeing a lot of that kind of stuff. If you are considering buying a home, if you're a first-time home buyer and you want more details on how this CMHC rule change is going to affect you, now's a great time to reach out to us, and also a great time to reach out to your mortgage broker because they're going to be able to really give you some in-depth knowledge on that subject, and then we will be able to help you find the home that's right for you in these troubling times. Of course, we're still working safe, so if you have any concerns there, don't worry. We got gloves and masks and lots of hand sanitizers. So if you are needing to make a move, feel free to contact us. We're here to help. Thanks so much for joining us.